Here we are, welcome to our live stream. What we're looking at here on the Aussie market is we're looking at the influences and the indicators that are pushing and pulling what the market does. So this is where we look and dissect the market from different cross sections, and we want to see how it's driving, what's been surfaced, where the leaders are coming from, and that's what filters through to our shares in play companies that we're consistently bringing up. So that's where we're connecting these leading market themes with those top performing companies so we can get better trading. And that's all what we're here for finer market points. And you can like this video to support the channel. You can click subscribe for more updates. And in the comments below, let us know what you're trading and what your indicators are. So to have a look here, we'll move over and have a look at the macro side of things. First off, we look at the Aussie market, and we want to see what's the market comprised of. So you can see here there's the market map. We're in CSPA, closing single price auction at the moment, or the closing match. The numbers are a bit exaggerated because all you've got the buys and the sells loaded up, so that's why it's a bit more extreme, or the colours are at least. The reds and greens are more prominent. In the top left you've got the materials, so the mining companies. You've got BHP, Rio, Fortescue, and then you can see Newcrest and North Star being the brighter red. They're down 5% for the day. They're the gold stocks down. Bit of a bounce on the energy. Oil search up 4%. We've got the banks reporting in the next week or so. So they're up about 2%. That is helping to bring the market up. So the market is actually up today and looking to close up. The main point we're looking at here is we see the top right, we've got materials being the large component of the market, and financials the other large pillar. The other ones do make up the other 10 or so indices on the market. Industries on the market. And what we're going to do is then come over and have a look at some other ways to cross section and look at this market for different ways to pull it apart and look at those leading indicators and influences. Now, one that we want to look at is a pretty basic one. We want to see whether we're risk on or risk off mode. So what we see here on this chart here is a whole lot of indicators that we use, and we'll start at the one at the top, which is the ASX versus bonds. So we want to see if money's being deployed into shares or whether it's being pulled out of shares and deployed into bonds. It's a pretty simple way of seeing, is money being dialed onto the market in a risk-on scenario? People are investing and looking for more growth, or are they scared, pulling money out of the market, selling shares down, and then putting it into a safer home, such as bonds? We can see here this chart. The green chart has been since November a pretty steady movement of more and more gains for the market at the share market, and then that's at the cost of the bonds that have been lower. So we move on down to the next ones, which is the white one here. Another way of looking at risk on, risk off within the Australian share market, or the ASX, we've got the ASX versus the utilities index. So again, in a similar way, while money might still be deployed to the share market, it's being moved within the market into utilities, and that's more of a defensive play. There's capital variation is far less likely in a utility company with the regular recurring incomes and not much variation in the value of assets, not in the short term anyway. So we have seen that a similar thing since November. So we're looking at here on the chart, this white line has been steadily rising, so that's a risk on scenario. The trend is still up, the risk on, we're still looking for growth in investments, and that's where the share market is in favour. Then we look for some anomalies. This is the short index that we see on the S&P 500, and we look at that versus the index itself. If we see any large blips like we do over here, sort of looking in September, and we do see some other spikes up here, if we see that short index outrunning the rest of the market, then we can see that maybe there's a short squeeze going on, something happening with the options market, and other anomalies that can make the rest of what we look at here today sort of take that with a grain of salt or look at it in further investigation in another avenue. But right now we're not seeing anything untoward happening here, so we can jump past that short index. Now we want to have a look here and see what's been happening with the metals and the AS dollar, the Aussie dollar versus the metals index. So this is where we're seeing this pink line here. So let's dial in here. So what we're seeing here, we do have the metals versus the ASX. So metals and mining, that's predominantly your BHP, your Rio Tinto, your Fortescues, and we can see they have been climbing. Again, that's sort of since the November, October, but that steady movement we are seeing here, late March, continuing up, and that steady movement. Another one that we have seen here is we look at the metals and mining versus the Aussie US dollar. So we want to see, is it the dollar that's driving it, or is it the demand in the metals and mining themselves? Is there that strong lift coming from the commodity side, or is it more of an FX play on the Aussie? we can see that the metals and mining are outstripping that movement within the dollar, so that is, they are moving on their own steam in a way. Then we have a look down here on the gold index. So we want to see, it can be an early indicator that we see on the Aussie. Let's move this over. We can see on the Aussie that within the Australian market, when we do have, let's get rid of that call, when we do have the market moving and gold stocks moving, what we are going to see is that the gold miners tend to move as a precursor to the gold price themselves. Not always, but quite often, because they are more leveraged to the smaller movements within the gold prices. So when the market does go up, we do see that the gold miners tend to shoot up more than the gold price themselves, and they can be a leading indicator there. So we have seen them moving up sort of early, what we're looking at early March here, and that's continued up. Have been on the nose today, as we saw in the market map in that top right hand corner, with North Star and Newcrest Mining being down for the day and going into the match that we've just seen close on out. Then we move down and have a look at the bonds. We want to know whether money's being deployed. So this is an understanding of the yield curve, whether it's being bought up in the long end of the curve or whether it's being bought up in the short end. And that tells us how investors are feeling for the comfort of the Australian economy and how it's progressing, and then also a risk on, risk off scenario as well. When we see this turquoise line here moving up, we're seeing that money's being deployed in the short term end of the market, and when it's being pushed down here, so we do see this dramatic drop. And this is really what we were seeing, is that the consistency of the monetary policy within Australia, we're still having that fixed, and that's not changing in the short term. So the money's coming out of the short-term bonds and going towards the longer-term bonds. When we start to see that ticking up, we're seeing more health back into that yield curve, but nothing really changing here. Moving next down, we want to have a look at how these bonds are going again. So this is the bonds versus gold. So the bonds versus gold shares, it's telling us, again, like utilities within the Australian market, that's a different metric within the market. This is a metric within the inflation play. Are we having money deployed towards gold stocks or towards bonds, or are they both getting a lot of money and there's a huge risk off and there's an inflation play underway? We're not seeing much here, so we can progress on. And then the final one here is we have seen it kick up in the last couple of weeks. So you see this chart down here in the bottom, this orange line, you can see that it has been ticking up throughout April. This is a bit of a concern because it does tell us that inflation expectations are rising. This is the comparison of 10-year bonds. We're looking at ones that are linked to inflation, so their coupons increase as inflation increases. And then the contrast to the downside is that it's just a normal 10-year bond that isn't linked to inflation. When we see this rising, we're seeing inflation bonds are being bought up, and that means that the expectations of inflation are rising. So that's a bit of an early indicator here. We're not seeing too much across the other ones other than gold moving up. We're not seeing too much play, but that is something to keep an eye on as inflation is bringing its way back into the Aussie market. Then we want to move over and have a look at some of the metals. So how these metals play out within the Aussie market. And what we want to know is in that mining sector, so we looked at the market map, we saw the top right, the gold miners, BHP, Rio, Fortescue, they do make up a large portion of the Aussie market. We want to understand how those commodities are actually forcing and influencing the price as they come through, how that's moving out. So then we want to have a look on this chart here over to the left, which will move the webcam out of the way. This chart here on the turquoise one at the top that we're highlighting, this is the metals versus the Aussie, so transpiring from what we saw before, moving that over. And then we want to see also the metals and mining against the index, so that's telling us, okay, they have been moving up. Then we have a look at how it's comparing on this silver line here. So how the market is comparing in the Aussie dollar. So how much is the Australian market moving against the Aussie dollar? If we see this line dropping, we see that the Aussie dollar has been increasing and the market's not keeping pace. If we see the market rising, which has been flatlining for almost a month, but when it's rising, we do see that the winds are going towards the market and the money's being deployed towards the market. This can be a bit of an indicator for when the Aussie market is a proxy for investment within the Australian market, and this is a way of pulling it apart. But it's been flatlined for a month, so we won't spend too much on that. Next over, we do have a look on the gold line, looking at the Aussie versus the basket of US dollars. It has been progressing up, so the Aussie has been outpacing the rest of the US basket, and that does bode well for the rest of the economy, but not necessarily too much play for the commodities. Now we move down to the bottom one, which is where it gets really interesting, because this is where we see the individual commodity prices influencing what's happening within the markets. And what we do see here is a strong movement from iron ore price that we've highlighted here. You can see since late March it has been moving up. So that's your BHP, your Fortescue, your Rio Tinto. They have been riding that tailwind, but some of them have been coming down a little bit. So the iron ore price has been gaining. That's positive for the Australian market. That's positive for the federal budget, because there are huge tailwinds in there for the Aussie as the amount of clipping of the tickets that the Australian federal budget does from a taxing perspective. But then we move on and have a look. We also want to see how copper's been playing out. Copper has been a phenomenal performer. So iron ore has almost doubled over the last 12 months. Copper is in similar realms, not as strong, but it is a proxy for global growth, global demand, and obviously out of COVID-19 it has been very strong, and that's what's showing up here on the copper side of things. So we do know that the copper prices are influencing what we're seeing on the Aussie market, and that is helping drive that segment of the market higher. Other ones that we check in on, we do see coal that has been coming sort of flatlining or down a little bit over the last month, but a strong rise from out of the COVID lows. And then the final one is precious metals. No surprise to see that coming up a little bit, as we have been seeing that movement in the gold stocks of late as well. This is not just gold, it's the precious metals basket. Now we have a look here on the right, and what we are looking at is the Aussie market in the context of the rest of the developed world. The top one here, the strongest performer, no surprise, is the NASDAQ is up. So we're looking at a common base here over the last year. That's up almost 65% rise on the indices. That's the best performer that we've got of the lot. Moving down second place, we do see second place is coming into S&P 500, and that has been trending higher and trying to get new highs. Not too far behind that, just north of 40% at 41.25% gains over the 12 months is the German DAX. Come down a step, we're at the Aussie market here, looking at 32.9% gain for this rolling 12 months, and that is just outpacing what we're looking at the rest of the market for the Shanghai Composite. So they were the earlier recovering from the COVID lows, but they have been coming down throughout February, March, and then flatlining through April. And then finally, the bottom one here is the FTSE. So 16.5% in comparison to the other indices, it has been left behind considerably. Now we want to bring over one more chart, which we'll move over onto screen here. Let's move that webcam out of the way so you can see the comparisons of what's been happening. So just once again, you've got up here NASDAQ at the top performer, S&P 500, German DAX, Aussie, then we're having a look at the Shanghai Composite, and then down here we got the FTSE. Let's bring this chart back over for you. Final one that we want to look at is we want to see how these have been pricing. So you've got the iron ore, you've got copper, you've got coal, and then we've got the precious metals, Aussie on the FX side of things, and then you've got the inflation targets here as well. But critically, that's the summary of the Aussie market. You do see it in comparison to the rest of the international forces that we're looking at here. The commodity influences that are happening, and then the inflation, we do see that sort of ticking up. That is one that's we're really looking at from here. We will look in the week ahead. So the point of this here is to wrap up and see the different cross sections of the market, whether there's something alarming, whether something's underfoot, something's underway that's not really meeting the headlines, but we are seeing the prices move and then the money being deployed in the markets. And this is where we can see early indicators that can lead us into a different avenue of research and go, okay, well, we can see that coal prices have been moving, or whatever it might be, in this case inflation. So we'll go away in the next couple of days, have a look at some inflationary trades that can be picked up, whether it's the bond proxies that might be moving, or whether it is actually just the inflation bonds that are moving. There could be movement within the hybrids. They're the things that we want to drill down in and surface where those top performing stocks are for the better trading opportunities. Thank you very much for joining us, and we'll see you again next week.